Hi guys, in today's video I'm going to go through a stock that I've basically been in since Monday, alright, and since I've been in, basically the week hasn't ended and it's already doubled, alright, so I'm going to go through why I went into that stock, of course the company behind that stock, and also I'm going to go through my portfolio, my live portfolio, showing basically where I got in on the stock, the price, and also where my account balance is currently at because I'm on the road to 100k. All right, so although I've not talked about it recently, but I'm still on that road. Trust me, I'm still on that 100k road. All right. So the reason I'm pretty much going through this stock is because I'm holding the stock long term. All right. And it's actually a stock that I want to share with you guys. You guys can get in on it. Basically, I'm expecting it to dip at the moment, which is going to be a perfect time to get in because you guys will be able to get in cheaper. All right. And hold it long term because there's a lot of good things to come for this company, all right, and this stock. So make sure you guys watch to the end because I'm going to share a lot of useful information that can help you guys with your trading and investment journey. Hi guys, welcome back to Investor Prime TV. David here. If you're new, this channel is a one-stop shop for anything investment. So investment ideas, investment discussions, stock picks, when to get in the market, when to get out. So make sure you guys go ahead and subscribe and of course hit that notification bell so you don't miss any further uploads and consistent content like this. Alright, so in today's video, I'm going to discuss a company and the stock that I've been in and behind since basically Monday, the 11th of January. I'm going to discuss why I've been in this company and basically what my plans are for the company going forward with the shares that I have. So what is this company? So the company is GameSpot. So ticker symbol is GME. Alright, so GameSpot, they basically had the last couple of years, or the last year in particular, their share price has just been falling and falling pretty much most of the year, if not the whole year. All right, so they've had a bad year, and this was down to the pandemic, etc. And they've been closing down shops, etc. All right, because not many people have actually actively or physically been going to the shops due to the pandemic. So in a way, they've been kind of losing business. 2021, they're making a comeback. You know, is January. January isn't over 2021. They're already making a comeback. This year, there's a lot of good things for this company this year and the stock price. So first of all, before we go into why I've gotten in this company or why I'm holding for the long term in this company, let's take a look at my portfolio. All right, guys, so currently we're looking at my live portfolio. All right, so basically all the figures, etc., relating to my portfolio. All right, so what I want to point you to is the market value. So this basically shows everything related to my actual balance, but in particular the net liquid, because this would show overall balances. All right, so currently my balance in US dollars is 13,700, and in GBP, Great British Pounds, is 9,600. So the last time I showed my live portfolio in a video, my balance was actually, I believe, $10,500. All right, so since then, I'm currently up 3,700 or 3,200. All right. So basically, as we scroll down, it basically shows everything. But what I want to point you guys to is game. All right. So GME stock. So I've been in this stock since Monday, the 11th of January. All right. So it shows you basically my average price. So my average price that I got in at was $19.97. All right, guys. So currently looking at GameStop Corp. All right. So GME, and it closed at $39.91. All right, so the pre-market right now seems to be down, but the last close, you know, the last run actually went up 27%. So this stock and this share price has actually been running, you know, the past couple of days. And I'm going to explain to you why, the reasons for that, and my plans going forward. Okay, so, but first of all, if we just look into GameStop, for those who don't know, okay, what GameStop or who GameStop are, all right, so they're based in Grapevine, Texas, in the United States. All right, so if you just look at who they are, okay, so GameStop Corp operates as a multi-channel video game, consumer electronics, and collectibles retailer in the United States, Canada, Australia, and Europe. The company sells new and pre-owned video game platforms, accessories, including controllers, gaming headsets, virtual reality products, and memory cards, new and pre-owned video game software, and in-game digital currency, digital downloadable content, and full game downloads, as well as network point cards and prepaid, digital and prepaid subscriptions cards. So already this company, they don't just sell games, all right? They pretty much got their hands in every pie when it comes to games and game, etc. So they sell basically the accessories, they sell consoles, they sell anything to do with cards. And for those who play games out there, you'll be aware of downloadable content, especially if you're playing online games, all right, prepaid, etc. So basically, if you want to get downloadable content, some of them you have to actually pay. If you want to be the best, etc., you want to just skip everyone else, have what everyone else doesn't have, sometimes you have to pay for it. So that's one of the ways that they make their money now. From that, the profile, if we just go to the summary of the company, okay, just to see the fundamental details about this company. All right, so the market cap of GameStop is 2.78 billion. All right, that shows that it's a mid-cap company and the company is very sustainable for the long term. They've been in business for a while. They've been in business for a long time, actually. So they're very sustainable. All right, it's just that they took a hard year in 2020 because they're predominantly a physical entity, meaning that you actually have to go to the stores to buy games, etc. But because, as we all know, the pandemic happened, nobody was going out. Not many people were going out, let alone going out to buy games. All right. So they took a turn for the worse. They took a hit on that. But this year, it shows that they're diversifying. They're actually coming into the new century, in terms of online e-commerce, etc. And I'm going to go into that in detail. All right. So they've got a beta of, in the last 5 years, monthly, they've got a beta of 1.43, which shows that there's some volatility in the share price. All right, the volatility is building up, which basically means more and more people are actually trading these shares on a daily basis. And you can actually see from the volume, the last trading day, the volume was 91.5 million shares traded. All right, that's a lot of volume. All right, and there's a reason there's a lot of people getting in on this volume. All right, getting in on this trade, getting on this company, etc. So the average volume is actually 13 million. Okay, or 13.4 million. All right, so if we go into the analysis of this company, a lot of people, especially people in Wall Street, I believe they're actually sleeping on this stock right now. Like, it's like they're not getting on this stock right now. Okay, and I'll show you why. Because basically, if you go on the recommendations, what analysis on Yahoo Finance, etc. are saying, these are the big dogs, these are the professionals, etc. often work for all these hedge fund companies or banks. So right now they're saying this is a hold. Okay, it's 3.2. They're saying it's a hold, but the share price has actually been making a huge run. So this should really, right now, I believe this is a buy, if not a strong buy. Or maybe they're implying that it's a hold because the market is about to correct itself. There's about to be a correction in the market. So the correction basically is effectively the dip. All right, this is when the market has made a move up and then it starts falling down. Basically, it's resting, okay? So while it rests, the bears kick in and lower the price, etc., before it takes off again. So I had a look at the analysis. I believe it's a strong buy, or it's a buy right now, between buy and hold, okay? If you're already in on GameStop, okay, and you already own shares like myself, then you can hold on to your shares right now, wait for a dip, and then add more shares on. Okay, so if we go into the first article from Motley Fool, okay, so if we just analyze it, so what happened? Shares of GameStop GME continued their rapid ascent on Thursday. As of 1 p.m. EST, the video game retailer's stock price was up more than 20%. I saw that move. All right. I was happy when I saw that move. I was excited when I saw that move because, this is the start of something great for this company and the share price. So make sure you guys get in on this, get in on the action. GameStop's share price has more than doubled this week. The gains followed the company's announcement on Monday that it would add 3 new board members, including Chewy founder and former CEO Ryan Cohen. All right, so for those who don't know, Ryan Cohen, co-founder of the company Chewy, they recently sold the company for 3.3 billion. All right, so basically he was part of building that company from scratch, and effectively the company was worth 3.3 billion for people to buy it. So as a business, from a business standpoint, the guy knows what he's doing. All right. So the fact that GameStop have hired someone with his caliber and his expertise as part of the board members, you know, they have plans for this company, all right, and they're taking it very, very seriously, you know. If we continue on, who is one of GameStop's largest shareholders? The new board members are expected to boost the game retailers' e-commerce and online marketing capabilities. So first of all, Ryan Cohen, he's one of the largest shareholders in GameStop. He's investing heavily in this company. So if someone like that invests in a company, so you better believe there's something they know about that company and they're prepared to take that company to new heights. So basically they're going to help with their e-commerce and online marketing capabilities, which is something GameStop really needs. All right, because before they were more about the physical side of things. You go to the shop or you go to the store and then you buy games physically, etc. But as we all know, the whole world has changed. All right, everything or most things are online now. All right, they're online. You can go online and you can do this. You can go online, you can play this game, you can buy that game, etc. Which means it's a lot more convenient for actually customers, okay? Because they can do things at the comfort of their own home, whereas before they would have to actually go out and do things. So if we go on to another article, so this is Yahoo Finance. All right, so the article is from Zacks. All right, so GameStop GME reports holiday sales, new members on board. So GameStop Corp's GME latest move to bring aboard 3 new directors per an agreement with RC Ventures LLC has garnered positive investor sentiments. Shares of this gaming retailer rose as much as 12.7% on January 11th. The stock's bullish run on the bourses can also be attributed to impressive comparable sales numbers for the holiday season. These upsides have helped overshadow the otherwise dismal net holiday sales figures. Let's look deeper into the developments. So basically with them appointing these 3 new directors, Ryan Cohen included, in an agreement with RC Ventures LLC, all right, it shows that they're actually getting involved with investors. Okay, they're taking this seriously. They want this company to thrive. They want this company to succeed. Okay, they had a bad 2020. Maybe the share price, etc., has been falling. Business has not been doing very well. So before the company actually goes underwater and has a lot of issues and a lot of problems, they're actually proactively trying to revive this company. Okay, they're proactively trying to keep this company afloat, if not thrive. They're actually making a lot of moves, like I've said, bringing on basically Ryan Cohen and new board members that are really going to help this company. And since they made that decision and that agreement, basically their share price has been rising. All right, and it's the start of something new. The share price right now is $39, but I believe it can easily get to $100 a share, if not more. All right, this is definitely gonna be a bullish year for GameStop. So if we just finish off with having a look at the chart of GameStop Corporation, okay, so as you can see, basically here's the move that it's been making basically since the 1st of September. It started, okay, at one point it was a penny stock. All right, so trading at $5, and it's just been moving upwards gradually since then. And partially the reason for that is maybe they initiated talks with Ryan Cohen and trying to get aboard new board members like himself, and in talks with RC Ventures. But pretty much the 11th of January, I mean, it even says, I have the note for myself over the weekend, all right, I believe on the 9th of January, that I wanted to buy, or I should buy shares on the 11th. All right, so I was even giving myself a note to make sure I don't forget, all right, or I don't put my funds in something else, okay? Make sure I had funds allocated for GameStop, and I did. I bought those funds on the 11th of January. In a way, I wish I'd bought more shares, but a lot of my portfolio was actually tied up in other securities, which I don't mind actually because they're doing very well. So what I'm going to do now is actually increase my position, all right, the minute I see a dip. Okay, so as you can see, it's made a huge run, all right, it's made a big run, too big, too quickly, all right, the run. So basically what I'm going to try and do now is I'm going to wait for a pullback. By the looks of things, the pre-market is actually lower, all right, pre-market is $37. So I believe this pullback is going to happen. I'm not really sure. In fact, let's have a look at where this pullback is going to happen. All right, so for me to do that, I need to pull up my trusty Fibonacci retracement tool. All right, So for those who have been rocking with me for a while, you know that I love my Fibonacci retracement tools, okay? And I'll explain exactly why. All right. So the reason I like Fibonacci retracement tool is that it shows to a high level of accuracy where the price is going to pull back to. Usually if it's made a big run too quickly, then a correction or a pullback is imminent. So what I'm going to do now is I'm going to set my support regions. All right. So if the price gets to these levels, then what I'm going to do is I'm going to be buying in stages depending on how quickly the price actually falls. Based on my Fibonacci retracement tool, I've drawn my support levels. All right. So I want the price, when the price gets to these levels, all right, and it's most likely going to get to these levels. And when it does, okay, I'm going to be adding shares at each stage of the way. So for those who don't know or are really unaware of how Fibonacci retracement tool works, so there's key percentages, all right? The Fibonacci retracement tool has a lot of percentages, all right? But there's the key percentages is 38, 50, and 61%. So basically what they're saying with the Fibonacci retracement tool is that when the price gets to these percentages, then it's likely to rebound and continue upwards. All right. If the run is bullish and vice versa, if the run is bearish. All right. But we deal in bullish markets. All right. Because we love when things rise. All right. What I'm saying now is when the price gets to roughly around $33 or $30 or roughly $27, then I'll be adding up my shares. All right. Building out my position on GameStop. All right, guys. So make sure you guys get in on GameStop. Okay, for the long run, because there's a lot of, like I said, there's a lot of exciting things happening for GameStop right now. 2021 could be the year, most likely will be the year, because they're moving pretty much towards the e-commerce side of things and online marketing side of things, you know, and that's pretty much where a lot of businesses thrive the minute they go online, because a lot of customers are online and they can pretty much tap into customers from different countries almost instantly. You know, whereas before they'll have to physically set up a shop in a different country to tap into those customers. And partly why GameStop has closed a lot of its shops is pretty much a reorganization of the management and the business. You know, where a lot of people would have actually seen as a negative because they're like, oh, they're closing the shop, they're losing money, they're not doing very well, etc. Investors basically see that as potentially a positive, because if a company is closing shops, you know, all the resources and all the funds they had for maintaining that shop is brought back to the business. All right, you understand? So they no longer have those liabilities. They're getting rid of liabilities. So if you enjoyed that video, make sure you like, comment, and subscribe. And of course, hit that notification bell so you don't miss any further uploads like this. Thanks, guys. I'll see you in the next video.